Did you know that there's a financial tool that can grow your wealth, protect your family, and even provide you with living benefits? Benefits you can tap in on when you are alive. And this financial tool encompasses all these benefits. We want to make sure that you know what this financial tool is, because it will help you future-proof your finances. In our conversations with clients, we've discovered what I will call a surprising truth. Many people have not heard of this tool. And for the few that have, they truly do not understand its power or even how it works. Today, somebody has invited you to this meeting, to this presentation, for you to hear about this tool. And I want to tell you, if you listen carefully and pay close attention, that by the end of this session, not only would you get to know exactly how this tool works, but you'll also see why it's a game changer. A game changer for anyone that is serious about future-proofing their finances in 2025 and beyond. So let's dive into this and uncover the potential you have been either overlooking or even not known about at all. Because at times people are told about this, when they hear one word that is in this tool, they get turned off. And I used to, like you all, like most people, until I discovered the power behind this tool. So, what is this tool that I'm referring to? This tool is called the Indexed Universal Life Insurance. And I will start by explaining what it means. It is a cash value policy, a special kind of savings plan, if you like, that also has the additional benefit of providing you life coverage and insurance coverage. You are growing money, cash value, and you are able to also have insurance coverage in case anything happens to you. This account allows you to grow your money safely over time, right? And this account can be used for several things, for so many things. But overall, as you step out of 2024 and you are stepping into 2025, this account can provide financial independence and freedom. You may not believe it. My wife and I just discovered this account exactly 2 years ago. 2 years ago, 2022. And immediately we heard about it. We did not even attend a presentation like you are privileged to attend today. It was just a friend that told us about it. And we immediately jumped into it. She did not even make a presentation to us. She just told us the benefits. And we saw it and right away got into it, and we have no regrets whatsoever. You could use this to make a down payment for a home. Okay, this is what it provides you, the financial independence and freedom that you need. You could use it to provide, as I said, make a down payment for a home. You could use it for tax-free savings, for retirement. If you're planning to retire someday, which everybody wants to retire someday, and it will enable you to build cash accumulation over time that provides you tax-free retirement. You know, everything in this country is about taxes. So imagine you being able to take out money tax-free at your retirement, knowing that even your Social Security is taxed. But this can provide you that tax-free. It can also provide college savings for your children. A lot of people are familiar with what they call the 529 college account, but which, however, is subject to a lot of things, including the fact that it cannot be used out of state. But this account allows you to take money out for your children's education anytime, anywhere, anyhow, once there is money in your policy. It can also provide you the ability to have a wonderful wedding for your children, or take that vacation, that dream cruise that you've been thinking of having. It can provide you the resources to do so seamlessly. You want to buy a car cash down? You can use this account to work towards it. You don't want to be like me and like many of us that buy cars and we pay over 6 years for it, or 7 years, or 5 years, whatever time duration. But at the end of the day, you are paid almost twice the amount. I just paid off a car I bought in 2018. That car, if I had walked into the dealership with 21,000, I would have walked away with that car. But you know what? I ended up paying 35K for that car. I was shocked. So with this type of account, you can do so without having to pay so much. You can also use it depending on your faith or your beliefs or lack of it, whichever. But if you have a charitable heart and you want to donate to charity, it enables you the ability to do so. Above all, you can also use it to leave generational wealth for your children and your children's children. I am a Christian, and I know that the Holy Books say that a good man leaves an inheritance not only for his children, but also for his children's children. So you can use this account to achieve that goal and that purpose. But you know, the beauty of it all is that you can do all this and get compound interest on every dime you put into this account. You get compound interest. At times I talk with people, and when I tell them about compound interest, they're like, what are you talking about? What is compound interest? They don't understand it. But for you to fully understand compound interest, you need to understand the rule of 72, what is called. It's a very simple thing. Don't let the big grammar or whatever it is confuse us. It simply means that if you divide 72 by the interest rate you get on any account or any money that you have, it tells you how many years it takes for your money to double. Okay? So, looking at that, there are 3 buckets, 4 columns we are going to look at here. Somebody who has money in and is just getting 1% interest returns on it. Your savings bank account does not do that. For most savings bank accounts, except the high interest yield ones that give you more than that, but the brick and mortar savings bank account gives you probably 0.5. Probably some give you up to 1%. But let's take 1% as what you get. And then you have somebody else that has an account that pays 4%. Now, look at the 1% account. If this is divided by the rule of 72 by 72 years, see how long it will take to double. It's going to take that person, it will take 72 years to double. 72 years to double. So let's assume in this instance that we have 4 people, all aged 29. The first person puts money in an account that doubles by 1%, another in an account that doubles by 4, the other that doubles by 6, that doubles by 12. You see the years? For the 4% is 18 years, for 6% is 12. For the 12%, it is 6 years it will take for that account to double. Now, they've all put 10,000 each. They are all 29, and they've put 10,000 each into these 4 accounts. So we see that for the person with the 1% bucket, that person has to get up to 101 years old for his account to be doubled. 101. How many people even live that long? Not that many. President Jimmy Carter just died, and he started as one of the longest. And in fact, I heard it on the news today. They said he's the longest longest president that has lived the longest of the United States, and he died at 100. He didn't make 101. So how many people make 101? Now, remember that most banks pay less than 1% ordinarily. But we are talking of 1% here. So very few people make it. Now, look at the second person, puts his in an account that doubles over 18 years period and is a 4% interest rate. So this will double twice by the time the person gets to the age of 65 at every 18 years. So at the age of 65, let's just peg it at 65, which means that the person in the first bucket will not even get his doubled at all. But this one, at 65, his money, the 10,000 he put in would have doubled to 40,000. Now, look at the person that puts in the money with a 6%, the account that doubles with 6%. By the time this person is 65 years of age, the person would have gotten $80,000 in that account. Fair enough. I mean, you will say that sounds fantastic. You only put 10,000 in, and at 29, and by the time you are retiring at 65, you have 80,000. Sounds fair until you know better, until you see what happens with the third bucket. Same person, same amount of money. Somebody puts in another account that doubles 12% over, and this happens every 6 years, doubles every 6 years, but the account pays 12%. Can you see the difference? By the time that person is retiring at 65, the person has a whooping $640,000. Same 10,000 each person put in each of those 4 buckets. Ignorance, they say, is disease, and it is a huge disease. Somebody who does not know and leaves his money in this account is going away, probably never seeing it double in their lifetime. Who puts in the 1% bucket, in the first bucket? And then the one who knows, what does he do? No wonder Albert Einstein says that compound interest is the 8th wonder of the world. He who knows it earns it. And when you don't know about it, you pay for it. And obviously, that is what this is telling us. So, as we go forward here, you also want to see something else that is very important. You need to know, because we are in a country, as we all know, where taxes play a great role. I mean, every dime you make is taxed. Uncle Sam is interested in taking his money, right? So you want to put your money in an account that you can get it, if possible, tax-free. And that is where what I am talking about today, I am focusing on this account that enables you to get your money tax-free. So here are 3 buckets here. The first bucket, A, is where we put our bank savings, your salary, your bank interest, your stocks, everything, mutual funds. It's taxable. It's taxed now, right? And then bucket B is where we have all our 401ks, 403b, 457, all of those listed out there, you find in that account. Now, as most of you know, there is a coming sunset of many of the tax cuts provisions that were made to help people that have funds in these accounts. Hopefully, since President Trump is back in power, they may extend those. But imagine what will happen to your 401k if you happen to retire when the taxes are higher. In fact, the first question is, do you think taxes will be higher tomorrow than today, because this is a tax deferred bucket where you are taxed later. Things hardly come down. In all probability, taxes will be higher. And by then you even have more. And you may have even transitioned to a higher tax bracket. So most likely, you're going to be paying more. Why do you want to put so much money in an account that grows over time? And instead of being taxed on the seed, you get taxed on the entire harvest. That is what this account does when you have your money in bucket B. You get taxed on the entire harvest, and so you pay much more. Now, look at bucket C. This is the tax-free account. This is the account that contains the subject of our discussion this evening. One of the reasons why you were invited to this meeting this evening is to get to know about this account as you wind up your affairs for the year, to prepare you for the incoming year, so that you can go into this year well-armed, well-equipped, well-educated, and prepared to grab the bull by the horns, so that your financial story will be different. So this is the account that contains your IUL, your Indexed Universal Life Policy, your cash accumulation policy, and you see it is tax-free, never taxed. It also houses your Roth IRA, your Roth TSP, and Roth 401k. But for these other accounts, you take out your money tax-free if you have had the account for at least 5 years or more, or you are over 59 and a half. Municipal bonds also fall into this account, into this bucket, but you lose the tax-free status if that money is not in the state in which you reside, if that account is not domiciled in the state in which you reside. But all in all, this is where you want to be. You want to make sure that you have the Indexed Universal Life account. That is one bucket that will certainly take you to El Dorado, as they say, that will take you to achieve your financial dream and ambition. The next thing we want to quickly consider here is how your money grows. Do you know that where you keep your money determines how it grows? Now, I'm going to show you three graphs here. There are 3 graphs. Take a look at these 3 graphs coming up on your screen. This will enable you to understand better how your money grows using particularly the subject of our discussion this evening, which is the Indexed Universal Life Policy. Look at the first account, the first graph here. This is where most of us have our bank accounts, money markets, CDs, and all of those. The growth here is very anemic. You can see, looking at that graph, you can see that it's barely growing. It looks like it's not even moving. It's parallel. The growth is almost parallel to the bottom line, because the interest rate paid there most times is less than 1% or not more than 3% is paid there. Now, the second bucket that you're looking at, the variable, this is where all your 401ks and all those other ones, your stocks and everything, is housed. The growth here can be very great, and at the same time, it can be terrible. In other words, the growth is volatile. That is why you see the zigzag, it goes up and down. My wife, who is a registered nurse, has informed me that this looks like what you see on a monitor for a heart attack. So in other words, it almost looks like your money is having a heart attack. You make money today, you can make a 20% interest gain today. In the morning, by evening, you lose it all. Let's recall all the crashes that have taken place over the years. 2022 was the latest, where the stocks dipped so much. If you have your money here, that is what would have happened to it, where so much was lost. But again, our focus is on this third graph, where your money is never lost. But you see, the most significant danger, I would say, about bucket number 2, the variable, where most of us have our money in the 401k. You ask people, where's your money? Oh, I have my 401k and all that. Is that if you retire and the market is down, you can end up with little or nothing to show for it. There's a story told about someone who had about 400k in his account, in his 401k, retired 2022, hoping that he was going to make a lot of money from that, at least get his 400k. This is even before taxes. We have not even talked about taxes. But with the market crash, the money was reduced to less than 300,000 from 400,000 that was there, before you even start talking of taxes. Whereas if you have your money in this indexed account, you will not have any of that heart attack. When you hear the word indexed, it means you have a cap or a ceiling, and you have a minimum guaranteed floor. In other words, you have upside growth potential and downward protection. In this account, you can only make money. You don't lose money. Even if the market crashes and things go haywire, most of the companies have a floor. Some might be 0-0. That is, you make no money, but you don't lose, because once your money goes up one index, one step here, it gets locked in, and that's it. It doesn't go down. Some have 0.25%, some have 1.25% as the floor. So that even when there is minus in the stock market, minus 19 that has happened in 2022, at the same, you will still be making 1.25% or 0.25% or 0%, but you don't lose money. This is the indexed universal life. That is the account that you need to seriously consider as you transition into 2025. I'm encouraging you to be like us, that once we saw this in 2022, we saw this in October of 2022. The same month, towards the end of that month, we immediately tapped into it and began to utilize it. So let's assume you have 20K or 30K. Let's make this a little bit more interactive now. If you have 20K or 30K, which bucket would you want to put your money? In the first, in the second, or in the third? Please, just indicate in the chat box. Let's see where you would want to put your money. In the first, the fixed, the variable, or the indexed? Of course, I know that most of us would want our money in the cash value account, the indexed account, right? Now, in addition to the benefits that the IUL comes with, not only are you making money, cash value in that regard, it's also giving you living benefits. It comes with a critical, chronic, and terminal illness rider. And this is something that none of the other financial portfolios will give you, that you have. The chronic, terminal, and critical illness riders are all standalone automatic riders to this policy. And if for any reason you cannot work, because you have any of these, God forbid, conditions, as we will say, particularly those of us from Africa, we always say, God forbid, it's not my portion, right? Heart attack, stroke, cancer, end-stage renal failure, and all of these. you have any of those, and your doctor confirms that you have any of these diseases, or even if it's terminal, like it's a stage 4 cancer. I lost a cousin last year to stage 4 cancer. That was when it was discovered. She didn't even have any kind of policy at all. Imagine if she had this. Given a number of months to live, you can withdraw, depending on the company, up to 100% of your face value to take care of your treatment, or even go enjoy yourself within the period you have before you go. Or any of the chronic illnesses, you are not able to perform any of the 2 activities of daily living. You can get up to 25% or more, depending on the company, of your face value from this account to enable you hire appropriate care. Get the appropriate care you need, whether it's in a nursing home or somewhere. But you know what? This is the part that most people do not understand. There's a part to all of this that a lot of people do not understand. Many people think that they have to pay so much to get this. Do you really have to contribute a substantial amount of money to get these living benefits that we're talking about? No. Or to even get this account. A lot of people, when once you tell them, they think that, oh, it's too expensive. Is it? On the screen that you're looking at is an active policy that is in force right now as I speak with you. And this policy belongs to one of my grandchildren. Because immediately we got to know about this account, we took out policies not only for ourselves, but for all our grandchildren. Our 3 grandchildren all have these policies. So this one belongs to one of them, one of the boys. It was taken when he was 2 years old. For this one, we are paying $100 a month for this policy. And the face amount is $150,000. If for any reason, this grandson of ours at the age of 4 suddenly develops any of the, God forbid, sicknesses, I will join in saying God forbid, right? We say God forbid. But if for any reason he develops any of those sicknesses, as owners of this policy, I could request the company to pay up to 100% of the face amount, which, if you look at it here right now, up to 100% of that will even give you, at the age of 4, will give you about 151,000, whereas the face amount was 150 with 2. And how much would I have paid in? 2,400. 2,400. If God forbid that were to happen. Folks, this is the power of the indexed universal policy. It has the cash value component. It has the life insurance component. It's a place where we can take money out of. In fact, looking at this account, this is year 4. At year 4, I can even take money out of this account because I am the owner of the account. Even though it's my grandson that is insured, I can already take money out of this account. If I had put 2,400 in any bank, how can I be able to take out up to 1,000 from that bank? That is not part of the 2,400. It doesn't work that way. Now, there's this story that I heard that just shows the ignorance that a lot of people have, and they do not know about this type of policy. Somebody owns this policy. Who owns this policy? And I got to know that the child of this person died just 2 years after taking this policy. This man was contributing $50 a month to the policy for 100,000 face amount. And he had done so for 2 years. But when the child died and the agent was telling him, hey, you can get money from the face policy, he was like, what do you mean? I've only contributed $50 a month for 2 years. That is nothing. I can't get anything. He said, no. Interestingly, the account, he could not only get the 100,000 life insurance policy, but it was over 100,000 because of the cash accumulation element, the cash value that policy had developed. So at times people even have these things and they don't even know the value. In fact, this prompted not only him, he decided he was going to get a policy for himself. His other children decided they were all they were all going to get policies, those that were old enough for it. And then another advantage that comes from taking a policy like this is that even if that child, God forbid again, my grandson who has this policy, later develops an illness, let's say at the age of 12, that would have made him uninsurable at that point. You know what? This child is already covered. It will not affect this policy because the policy is already in force. And the child is already protected. And we will continue paying the same premium. The only reason we'll pay anything higher is if we want to build the cash value more, because the more you put into it, the more you make. Other than that, the premiums will not increase by reason of this new development or this sickness or whatever it is, the chronic illness or the critical illness. It will not. That is the beauty, one of the beauties that this account has. Now, another terrible thing that we have come to notice in the course of dealing with folks is that many people are ignorant, again, about this tool, the advantage of this tool, getting this tool when they are well. A lot of people ignore this tool until it's too late. They think that, oh, okay, I can get it anytime. No, you can't get it anytime. You can get it when you are well. This is not one of those things you can get when you are sick. It is when you are well and healthy. Because it's an insurance. The insurance company is taking a risk on you. They wouldn't insure somebody that they know already is quarter to death. No. So you need to take this policy now. In fact, yesterday was too late. And mind you, there's no guarantee that you will get it because it still has to go through a process. But one thing that we've also come to realize is that a lot of people, when they don't understand something, they call it a scam. And when they realize that it's not a scam, it's already too late. Or some people will tell you, I can't afford it. It's too expensive. I can't afford to put $50 aside every month. I can't afford to put $100 aside every month. Yet, these same people will be able to buy a cup of Starbucks coffee, $5 something every day, 5 days a week as they go to work. By the time you put that together for a whole month, you are spending $100 and something on coffee. But you are not willing to put $50 aside, $100 aside, $200 aside, depending on your income and your responsibilities, to have such a huge benefit. It is something that you need to take into deep consideration before you leave here tonight. I encourage you, speak with that person who invited you to this meeting. They would be able to tell you where you can find the money, because oftentimes we think we don't have the money. But by the time they sit with you and do some expert financial analysis on your finances, you'll be shocked to see that you actually can afford something that is solid and something that will prepare you and put you in a good position and in a good place for 2025 and beyond. This brings to mind a very, very sad story. I don't have too much time to go into it, but at the end of the day, in this case, it was another colleague who had been trying to convince another person to take this account. But you know what? The person refused to, kept putting it off. And unfortunately, she developed cancer. Down the line, she passed on. Everything she had worked for was spent trying to take care of that disease, and they still couldn't. And at the end of the day, even to bury her, they had to do GoFundMe. Is that something you want for yourself? Another huge benefit of this account is the probate challenge. A lot of people don't know that the moment you breathe your last in this country, boom, your accounts are sealed. All your accounts are sealed. It has to go through probate. All your bills will be paid first. Your family gets paid last. That's a huge one. Look at this person here, Chadwick Boseman. A lot of us know about him. The hero of Wakanda, the movie Wakanda. Look at what his wife got because he didn't have the solid things that he should have put in place when he passed on. With a 3.8 million estate, what did the wife finally get? 1.15. Because he had to go through probate and all his bills had to be settled first. Look at this. Some people will go and do GoFundMe. This was a man that had made money. And yet, when he died, they had to do GoFundMe to try to raise money to take care of him. Is this what you want to do? Is this what you want your family to go through? Many of us Africans, we want to be taken back home when we pass on, when we go to sleep. Now you do GoFundMe to take you home. Where will you get the money for? These ones we are looking for 20,000. Yet, as of the following year, this year, they hadn't even made that. Do you want to pass your loved ones through such a situation? Folks, don't leave here tonight without talking with the person who invited you. Now, many of you might think, is this a strange account? Is this a new account? Where has this thing been? I've been in the US for so long. I've not known about it. I've not heard it. No, this has been in existence for a long time. And here are some famous people that have used cash value life insurance to either jumpstart their businesses, rekindle their businesses, or get way ahead in life. Some of these faces you will know. Some of these names you are familiar with. McDonald's leveraged his policies to pay his employees and fund the McDonald's Hallmark project during the 2008 economic depression. Look at Walt Disney, what he used his to do. And we have more. Look at John D. Rockefeller. Leveraged his policies to fund his family's trust. Eliminated market losses, outpaced inflation, and left a financial legacy of millionaires. Look at J.C. Penney. These are people that have leveraged these accounts to build generational wealth. Now, who do we work with? We work with several companies. My colleagues here, the person who has invited you, we work with more than 45 companies to provide a policy that suits your own individual need. So I want to encourage you again, talk with that person that invited you tonight. Talk with that person. Whether you desire to build wealth or retirement, pay off a mortgage, plan for your children or grandchildren's future, or simply leave a legacy for your future generations. Like Rockefeller, the person who invited you will find something suitable that will suit you. No one here will take money from you. That person will not take money from you. You pay directly to the insurance companies. Look at all the reputable companies that we work with. Talk about the big names of in insurance in this country. They're all here. So you pay directly to the company after you are approved. As I said earlier on, approval is not guaranteed. That is why you want to try today to look for a product so that we can complete an application for you to see if you can get approved. So again, do not fail to talk with that person that invited you. Do not defer this and put it in the think bucket. No, this is an actionable item. You are going into 2025. You want to make a difference, act on it today, because tomorrow, in my language, we say that tomorrow is pregnant. Nobody knows what it will give birth to. You don't know what tomorrow will be. So you want to act on this today, right? Warren Buffett, the Doyen of Omaha, I don't know, there's another way they call him. He said, risk comes from not knowing what you are doing. But today, you have heard, you have understood the power of this financial tool and how it works. And so the decision is yours. It will be risky not to act on it. Will you use this game changer to future-proof your finances in 2025 and beyond? Or will you rather let your money continue to sit idle and lose value in some account that doesn't pay, that is not worth it? Now you know. When you didn't know, it's a different thing. So the decision to make 2025 the year you rise above financial uncertainty and create a roadmap for lasting wealth is now yours. As C.S. Lewis said, you can't go back and change the beginning, but you can start where you are and change the ending. Thank you for your attention this evening, and I pray that this is one meeting that you will thank God and thank the person who invited you.